Welcome to this video. In this video, I'm going to be making a stock analysis of Equinox. So if you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice. This is purely for entertainment and educational purposes. Now, first, let's take a look at the stock graph in a bit of a wider time span. As you can see here, if we go all the way back to 14, it has risen quite amazingly. As you can see in 14, it's at mid to early 14 was trading all the way in 178 bucks. Now it's trading all the way up in 886. Of course, very nice. But then again, it has been 11 years. Now, what does Equinox do? Well, you might think of them as a server real estate property, as you can see here, real estate investment trusts. And now, if I'm going to go down here to the income statement, you're going to see the thing they make the most money on is co-location, as you can see right here. And to dumb it down, that is real estate for servers. They own and operate servers and server locations and data centers all over the world. But if you're a company, you can also just put your own server racks into the facility of Equinox and you can operate the service yourself. But of course, you're going to need somewhere to put them. That is where Equinox comes in, and they provide the power and cooling as well, and as well as maintenance. So that is really their business model, and I like it quite a lot because, of course, we're going to need to see more and more data centers in the world, and they are an international player, so they are quite huge, and I like them quite a lot. Now, if you can see up here, as you can see in the earnings here, as you can see, that's performing quite nicely. As you can see, beat it by 18, then 5, then they missed this one by 100%, which was quite poor, and then beat this one by 17. And as you can see also right here, even though they missed it by 105, it didn't really matter that much at the given time, but then afterwards it did tumble quite a bit, but this was more due to Liberation Day. As you can see here, the beta is quite low on this at 0.76, which means that this moves less than the index it is in the Nasdaq, which means that this is less volatile. This means when Nasdaq is going up, it's going less up. If the Nasdaq is going down, it's going less down. So it's more secure. As you can see, the dividend yield indicated is 2.12%, which is very nice. And as you can see here, it is several times here, both in May, in February, and in November, and as well in August. So 4 times here, which is great for the dividends. Now, as you can see here, currently we are trading quite poorly down here in the RSI. Now, if you don't know what the RSI is, that is the relative strength index. Now, what does that mean? That means if something is between 50 and 30, it's in the lower channel, as you can see here, and the stock is moving downwards right here. And it's between 50 and 70, as it is right here, it is moving upwards. Now, if something is up here or down here, it's either oversold or overbought. And when it is that, I would be a bit more careful with buying in, because this means it can more sharply move in either directions. But just because something is oversold, for example, doesn't mean it's not going to get even cheaper. As you can see right here, it is oversold right here with an RSI of 27, but then again it moves down here. So because it is relative to the previous stock prices, it can always go lower or higher. As you can see up here, even though it was up high up here, all the way up, and what is that? The peak here, almost 80. It could still have moved upwards like this. Now currently we can also see we did have a golden cross all the way back in April, and we still have that, which is quite nice. But we have seen the SMA is moving a bit closer, so chances are we're going to see a death cross if this doesn't rise a bit more. Now, if you go back to the financial, as you can see how they make their money, they are quite focused company, and by that I mean they don't have a ton of stuff, as you can see. So their main income source is this co-location, and the interconnection is also quite huge. As you can see, they are all over the world: United States, EMA, Asia Pacific, the Southern Americas, United Kingdom, as well as you can see here, but that's only really huge in this year alone. And then Japan, Singapore, and then again. But overall, they are in a lot of countries, which is very, very nice. And you can see the revenue here broken up. If you look at seasonals on this stock, as you can see, let's just go back to 2010, like so. Some years are quite amazing, as you can see, 100%, 66%, but overall just quite nice. Then we also see some some years with quite poor performance. As you can see, we have 4 years down here with very poor performance, and then we have, as you can see, 25 this year. We're down by 6%, which isn't that bad, but chances are I think we are gonna increase, because I think servers and software companies are the next ones to get this huge AI boom. At least that is my opinion. Our technicals for this for the day is neutral, and for a month it is buy, and that shouldn't surprise you. As you can see, even though we were down here in April, we have been starting to move upwards slowly, even though we have seen a bit of a downpour, but because it's not that huge chance, that's why we are still in a buy. Now the analyst reading of this are amazing. As you can see here, we have 30 analysts on and 26 strong buy and 4 hold, which is absolutely amazing. As you can see, even the worst prediction on this is down by 5%, which isn't really that bad. And as you can see, the best one is up by 35%, which would be absolutely amazing. So overall, the average by the end of this year price target is 1,000. Now the annual earnings list is just, as you can see, they have just increased them a lot, and as you can see, they're just increasing them continuously. So in 10 years, they've increased them, as you can see, from estimated 4.38 to estimated 16.98, which is absolutely insane. That also a reason I like the company quite a lot. As you can see down here as well in the revenue, it's just the same story. They're just estimating to increase more and more and more, which is nice. And Tensile, they're also going to increase their dividend as well because more and more companies are going to need data centers. And it is, of course, a very nice revenue source that happens year over year. So I do think this company is going to perform great in the future. And I don't own any at the moment, but I have been considering buying into them. And I do think chances are that is going to happen in the future. Now, if you like this video, as I said, please don't forget to like and subscribe. And if you want to see any other companies, please leave those in the comment section below.